The end of the year is fast approaching, and we're here to help you tie up those loose ends, manage your portfolio. Here with expert advice, our financial panel, Larry Shover, the CIO of Solutions Funds Group Alternatives, Alan Haft, the author of You Can Never Be Too Rich, and Tim Thielen, C Capital Change CMT. Great to see you all here. Thanks for coming in. So, Alan, I'll start with you, my friend. People on fire. Consumers are throwing money into stock equity funds like it's going out of style. Are they doing the right thing?
To an extent, yes. I mean, listen, until interest rates start to rise, there's really nowhere else to put money right now. So I think this party's not going to end for some time to come. That's for sure. So for my money, I'm putting my money into stocks, especially since valuations are only at 17 times earnings. Historicals are about 15. So we're not that frothy right now. There's room to grow in this market,
room
for
to
sure.
grow. Larry, do you agree? And what are you telling your clients to do end of the year here? What's been your advice?
Well, the thing is, just keep in mind that we've fallen down like a 7-year flight of steps. And the fact that the market's rallied so much, yes, it's a massive rally, but it doesn't mean that we're going to stop or correct. It's not a bubble. It's constructive. I mean, economic momentum is in our favor. You're seeing the multiples market right now, just as we talked about, it's fairly valued right now. And our economy does have room to grow. I mean, it's not going to be as easy as it was in 2013, but we still have room to the upside.
Tim, break the impasse here. Do you disagree? Do you agree? Where are we headed?
Well, as a technician, I am not so much focused on valuations, but when I do my technical work, I see we have a little bit more upside before a possible pause, but not a major correction, and then further upside from there. So if anybody can stomach a 4 to 5% correction, it's still not too bad to get into stocks right now.
Ah, okay. When is that going to happen, Mr. Tea Leaves?
Well, I'm thinking we get to about 1836 to 1841 on the S&P cash index. Then I'm calling for a 4 to 5% pullback from there, and I'd be loading the boat on that pullback.
Alan, it's an interesting point. Things that go up have to come down sometime, and I know a lot of people out there are saying that the valuations at this point at 16 times earnings, not frothy. On the other hand, you're sort of exposed to any bad news that might occur. And we've got some big things on the agenda for individual investors. Taxes are going to be critical concern in the coming months, into the year. What do you make of that? Do you think that individuals are going to respond to other issues, other demands for their money, instead of throwing every nickel and dime at stocks?
Well, first of all, it's a good time, by the end of the year, it's a good time to look at your winners and sell some of them and against some of the losers to tax harvest. That being said, if you look forward to next year, Jerry, the big issue in next year is when is the Fed going to start to taper? So in anticipation of that, you should also look at your portfolio to make sure that you don't have interest rate stocks or heavy bonds with long durations in them. You should really take a careful look at that and maybe raise some cash. So to the other person's point, when a correction does come, you have some cash sitting on the sidelines so you can really take advantage of some of the buys on the lows, because those will come sometime next year, probably around when the Fed starts to taper, or when Congress starts to rear its head in January to debate the debt ceiling again.
I know. They'll come back sometime. I'm not looking forward to it either. Larry, you said something really interesting about it's been like falling down, a 7-year fall down a flight of steps. That is such a great metaphor, and I know a lot of people have felt the pain of that for some time. Do you agree with Alan? Are you selling your losers? Are you cashing in the stocks that have done well for you? What are you telling people here at the end of the year? The ways to think about what's coming, what's in your crystal ball here?
Well, I think what's in the crystal ball is that more of the same. I mean, people are starting to get their heads around the fact that the Fed, this whole strategy of tapering is not a philosophy, it was a strategy. And the fact that they're going to keep interest rates low for a long period of time gives us the momentum that we need for the financials to do well. And as we've seen, they've started to do really well, especially the large cap banks and materials. I mean, I still think we're in the infancy of a construction boom in the U.S. It's not going to happen overnight. So financials and materials, if you're not allocated to that properly, that might be the way to go for 2014.
Alan, do you agree?
Generally, yes. But, to that point, nobody's really sure how the markets are going to react. So if you want to hedge a little bit, it might make sense to buy a put or put some of the VIX in your portfolio just to hedge in case we're all wrong here, right?
Which can't happen. I know. I know you guys are good, but you're not perfect, and nobody is.
Right.
Tim, to you. it was interesting. BlackRock put out a blog over the weekend saying that, there's not a lot of volatility in this market now, and it made them nervous, obviously. They were concerned about that. What do you say? I mean, do you want to welcome volatility into the market, or should we just get over that?
Well, I mean, things can remain in a low volatility environment for quite some time. We saw that from 2003 until 2007. I think the thing to focus on is looking at prices where they are relative to support. There's a lot of good people putting out good opinions on where the resistance may be. When we do hit certain technical levels, if we are still at these low volatility levels, buying volatility near resistance is a very, very good hedging strategy.
All right. Larry, Alan, and Tim, thanks for coming on. You guys did a great job.
For having
Appreciate
us.
your time.
Thank you.
Thank you very much.
Thanks.